Hi everyone, my name is Kaustubh Kale. I am a chartered accountant and CFA who helps my clients with all investments and insurances. So, say if you have a lump sum amount available to invest, and for whatever reasons you are hesitant to invest it directly at one go in, say, direct stocks, that is equities, or even in equity mutual funds, then we have some interesting options for you. I will talk about two options here which will help you release your stress or make you less hesitant. The first option is very popular, called as systematic transfer plan. You may have heard about SIP, you may have heard about SWP also, but for some reason you may not have heard about systematic transfer plan. Let me explain you how this works. Let's take an example. If you have 1 crore lump sum available to invest, yes, an amount of 1 crore, and like I said, you are hesitant to put it in mutual funds or direct stocks at one go, then what can you do? You can use the concept of systematic transfer plan, where the entire 1 crore gets debited from your bank account and it gets invested. It sits in a debt mutual fund. Now, a debt mutual fund, as you may be well aware, has no stock market related risk. So the amount is invested in a debt mutual fund. Okay, and let's take an example. Over the next 25 weeks, which is roughly 6 months, over the next 25 weeks, we start a systematic transfer plan for you, where the amount is debited or deducted from the debt mutual fund and it gets transferred to an equity mutual fund. Over the next 6 months, roughly 25 weeks, 4 lakh is deducted from your debt mutual funds and gets invested in equity markets, in equity mutual funds. Now, what does this do for you? It invests your amount in a staggered fashion, in a more relaxed fashion, and in a piecemeal fashion, where every week an amount is debited and invested. It's just like say an SIP which is happening every week, but in this case your amount is already debited from the bank account at one go and it's invested in a debt mutual fund. Now, what is the benefit of this? Say over the next 6 months, if the market is expected to go down or if the market goes down, your average cost will obviously reduce, which is a good thing. It's a benefit for you. But in case, in hindsight, you will come to know, if the market actually goes up, your average cost increases. So you have to be open that it has its risk as well as it has its reward, which you can decide. But I think it will make you more comfortable to invest, because everything in life, like we say, has to be done in a staggered fashion. Now, a systematic transfer plan can also be done on a daily basis, but I would not recommend you to do daily. I would also not recommend you to do monthly. Choose weekly, because weekly is a good enough option. Monthly will be very slow, daily will be very fast. Weekly is a sweet spot, it's perfect. And you can do it for even 3 months. I would recommend you can either do it for at least of 3 months or a maximum of 6 months. I would not recommend you to do it for 12 months, 9 months, or even more. The reason is very simple. In stock markets, we always say that bulls go up by staircase, but bears come down by elevator. Means जब market गिरता है, when the market falls, it's generally falling very fast. So over the next 2, 3, 6 months, if you expect, then eventually this would have been taken care. Hence, doing it over 3 or 6 months is good enough. Go for a weekly option instead of a daily option, or instead of a monthly option. Hence, basically go for anywhere between 10 weeks, 12 weeks to 24 weeks, 25 weeks. This is a good enough scenario. Now, this was option 1, called as systematic transfer plan. To summarize it once again, what it does, it helps you reduce your tension. The money is already debited from your bank account. It goes and sits in a debt mutual fund, and piecemeal fashion, staggered fashion, it gets invested in equity markets, in equity mutual funds. So it makes your job or the process very simple. Now, option 2 is something that we have already spoken about before, where we mentioned some schemes which are very good for lump sum. I'll send the video link here as well. Okay, these schemes are called as balanced advantage funds or multi-asset fund. A balanced advantage fund invests in equity as well as debt, so it's a hybrid fund. Now, here the beauty is the hybrid, because it's a hybrid fund or a balanced advantage fund, the equity and debt is fluctuating. Means if the market is at expensive levels, then equity portion will be less. As market falls, the equity portion will increase, shifting it from debt to equity. Now, a multi-asset fund also does this, where the equity portion is variable, but it goes one step further, because it also invests in commodities like gold, international equities, precious metals, basically gold and silver, or even commodities like oil. So basically, it has a good mixture of Indian equities, international equities, gold, commodities like oil, and obviously debt. So if you want to invest lump sum, and if you want to invest one go, if you have a clear time horizon of 5 years, 7 years, 10 years, then you can also choose option 2, where you can invest in balanced advantage funds or multi asset funds, which will also do that same thing, which is timing the market for you based on various asset classes. So I hope this was useful. You can either use systematic transfer plan, do it over 3 months or 6 months, basically choose the weekly option and do it over 3 months or 6 months, or choose balanced advantage funds or multi asset funds. Hope this makes it easy. Thank you so much, everyone.